What if I told you that most of the money that you owe was actually created by your signature and was not created by the bank? In this video, I'm going to break down the illusion of debt. I'm going to break down how banks never actually lend you money. I'm going to break down how your promissory note funds the transaction. And I'm going to talk about why you may not owe what you think you do. You dig me? Now, I've studied contract law, banking, and commercial code, and I'm here to show you what's really happening behind the scenes when you take out a loan. Now, before we dive into this profound video talking about the illusion of money, talking about the illusion of owing money, I want to first thank all of my supporters. We've reached 20,000 subscribers. This not only has been a dream to me, but, before I even started on this journey, my goal was to just put out the information that I was doing short form and actually be able to do this long form and give you guys the game in a more guided basis for free. So once again, thank you guys for subscribing. If you're brand new, make sure to hit the subscribe button. Make sure to like the video because we're about to be diving into some information that nobody talks about, okay? People will give you all this rigmarole, but they won't tell you actual concepts that will actually work. You know what I mean? And if you're a person who actually wants to make this work, this will be the video for you. All right? I also post consistently, okay? Unlike these other creators, they are not working. You dig me? So let's dive straight into it, okay? Hit that subscribe button down below. Put a muscle emoji for 20,000 subscribers. And let's get straight into it. Okay, so here's the lie that we've been told about. You dig me? We've been lied to about debt. We've been lied to the fact that we actually owe money. And I've talked about this concept in my earlier Instagram videos when I would talk about the trust, when I would talk about your birth certificate, when I would talk about, the aspect of not to stop paying your bills. And it was never to tell a person to just ignore your bills, but it was more of you performing on your bills. And we're going to talk about that in a second. Okay. But here's what society teaches you. Society teaches you to borrow money. That leads to the bank lending you its funds and you repay it with interest. And that's okay, right? That is the reality that we live in. And that's what you're supposed to do. When you first purchase or when you first get a student loan, that's one of the first things that you get a loan for. The next thing may be a credit card. The next thing may be an auto loan. The next thing may be a mortgage. You know what I mean? So what I'm about to talk about applies to all of those things. So if this is your first time watching this video, watch it all the way to the end, because not only will I tell you guys the illusion, but I'm going to break down how to be able to fight against it. Now, here's the reality, okay? The banks don't actually lend you anything that they already have, okay? You signed a promissory note, which is a negotiable instrument, and it is deposited as an asset. You know what I mean? So when you look at it, your promissory note was actually a financial asset to the bank, and the bank took your promissory note, exchanged it for the money that you asked for a loan for, and they used your promissory note or your signature on that promissory note to create the credit. This gave them the ability to participate in commerce. Okay. So thinking about it, the asset is used to create new money through fractional reserve banking. It's not used to take the money that they already have and then loan it to you. So we're in this cycle thinking that when we apply for a new loan, or when we apply for something, we're actually being loaned something, but we're actually not. Okay. And we could talk about how you can challenge the consideration of the loan. We're going to talk about on whether or not what right questions to ask the bank and how to take them through a particular process so that they will make sure that so that you can ensure that you're not being taken advantage of by the banks. Okay. But understand that you created the value. You did. Okay. And they billed you for it. Imagine you gave them something that paid them up front, and then after that, they're trying to double dip and make money off of something that you already benefited them for. Okay? So when you hear this talk about, oh, I'm the beneficiary or we're sovereign citizens and things of that nature, I'm not going to dive down that road of sovereignty and things of that nature, but there is truth to those things. And I'm not going to speak from a theoretical sense. I'm going to speak to what's actually documented, what's things you can actually look up in law and books that you can read. Okay. Now, let's talk about how banks actually create loans. You dig me? There's a book called Modern Money Mechanics, okay, that you can easily look up online. You can just type in Modern Money Mechanics, okay, and it'll be the first link there. You know what I mean? So here's Modern Money Mechanics, can easily be found. So everything that I'm talking about is written in this book. If you genuinely wanted to see the information, and I come based off of truth, not emotion. All right, very different from a lot of people that get started when it comes to this. They're more focused on the emotion because of the things that they hear me say instead of truth. All right. If you read this, you'll find the truth, and you won't come from a perspective of emotion. You will come from a perspective of truth, and you will be challenging them on the truth, rather challenging an emotional feeling that you have. Okay. So it talks about what money actually is. But I'm just going to go down to the aspect where it says who creates money. Okay. So you can read all of this, but I'm going to go ahead and just talk about certain things. The actual process of money creation takes place primarily in banks. As noted earlier, checkable liabilities of banks are money. Okay. These liabilities are customers' accounts. They increase when customers deposit currencies and checks, and when the proceeds of a loan made by banks are credited to borrowers' accounts. Okay. Then we can dive in, and it talks a little bit about how banking actually started, how it started with goldsmiths as early bankers. They initially provided safekeeping services. Okay. And people will exchange gold ingots for notes like IOU notes. It got to a point where they started to exchange IOU notes to other people, and those other people can take those IOU notes to that representing bank and pull out those ingots if they want to. But most people wasn't carrying ingots. So this is what happened. People started leaving the gold inside of the bank and just exchanging these notes or certificates that said that you had this amount of gold ingots in the bank. Okay. So that's how, banking initially started. But once we could talk about House Joint Resolution 192 another day. But specifically, we're going to read this part where it says, then the bankers discovered that they can make loans merely by giving their promises to pay or banknotes to borrowers. Okay. In this way, banks began to create money. More notes could be issued than the gold and coin on hand because only a portion of the notes outstanding would be presented for payment at any one time. Okay. Enough metallic money had to be kept on hand, and of course, to redeem whatever volume of notes was presented for payment. So long story short, and this dives into this even deeper when you go through this entire money mechanics section, but just to break down one of the key points that stick out to me as it pertains to modern money mechanics, it says in the books that banks do not lend money. They create it by issuing credit based on your promise to pay. Okay. So it's the same for them as well. All right. So they create credit as long as you promise to pay, because this is how they started to do it. They started to tell people that, hey, we'll give you, we have these bank ingots. Okay. And, instead of, instead of you having to carry this around, we'll just give you a certificate of the amount. Okay. Because they was expecting more people to come and use their gold for safekeeping. Okay. So in a modern day, this is how it's broken down. When you sign a loan agreement, okay, it's actually a promissory note, which is a promise to pay note that they can then monetize. Okay. So not only is that negotiable instrument something valuable to them, but it's also at the same time something that they can make money off of and also redistribute. Okay, so instead of them actually putting money in or giving you money, they book it as a deposit. For most of you guys who don't know what a deposit actually means, when we think of deposit, we think deposit means what? When you go to 12 CFR 204.2, okay? You can also go to UCC Article 9 and you'll be able to see this definition too. But it says the definition of deposit means the unpaid balance of money or its equivalent received. Okay, so another definition of deposit can also mean a unpaid balance of money. So if someone deposits something into your account, they're essentially saying that we are this is an unpaid balance. Okay, so in that effect, the bank creates a matching credit in your account. Okay, they just really type it in as bookkeeping entries as unpaid balances, and you think that that's actual money that they loaned you. But the reality is they just typed in the deposit. I mean, deposit is literally just a book entry. You know what I mean? So here's where the fraud happens. They then ask you to repay something you created. Okay, the only way they can deposit money in your account is if you actually create a promissory note, sign it, and give it to them so that they can now resell it, securitize it, monetize it. All right, let's just move forward. Let's just talk about the aspect of the illusion of an obligation, okay? Because this is the whole point of the video. I just told you that we create credit based off of money, based off of our signature from a promissory note. It's literally written in Modern Money Mechanics, which is the book of all banks. So now we understand that money is literally created out of thin air or created when you sign something. Your signature is the gold. Let's talk about the aspect of you being told that you owe something that they never gave you. Okay, the bank will say that they loaned you something, but reality is they never loaned you anything at all. So now why are you charging me? And yes, I'm speaking with emotion right now so that you can kind of just understand just overstand it, because I'm not going to tell you to go scream this to the bank, but just think about it. This is just to empower you. Why are they charging you again if you already paid them up front? Or if they didn't even loan you anything? Why are they giving you the assumption that they loaned you something when they actually didn't? These are the questions that you got to ask. Not only yourself, but them, okay? Because understand this, when you think of a contract, there should be an even exchange. That's called consideration. If there's a lack of consideration, then the contract is invalid. But before we talk about that, let's just talk about what the bank walks away with when you actually signed a promissory note versus what you walk away with. I just told you walk away with an unpaid balance and you walk away with a money that was created out of thin air. Okay, so the bank walks away with a deposit, which is your promissory note. The bank also walks away with monthly payments. The bank also walks away with interest on those monthly payments. The bank also walks away with the ability to sell the loan as a security. We're not even talking about the promissory note. And they also walk away with a possible insurance payout if you default on this fake loan. Okay, some way, somehow. I mean, I'll put it to you like this. A lot of us, this is a very systemized, so everybody's going through this. A lot of people are going through it. But so it's not a some way, somehow. It's more of a, it's already happening. Okay, unless you tell them that you know that it was a loan that you created, then yes, they are going to treat it as if they loaned you money. Okay, so just thinking about it, they profit 3 to 4 ways off of your signature. So technically this isn't debt. As a matter of fact, it's really a contract based on partial disclosure. So partial disclosure, if you don't know, that just means that they didn't disclose all the details to you, such as the fact that there is they do get paid through insurance. They do have the ability to sell it, and they created the money based off of your signature. So yes, there is a partial disclosure because this stuff should have been disclosed to me to determine whether I should be paying you back. If you told me this, would I be paying you back? Probably not, and that's why you didn't disclose that information to me. So understanding that this is a contract, and we are talking about a contract. We are not talking about somebody that loans you money. and all your goal is on a contract is to perform on a contract. Okay? So here is the legal and contractual problem. Okay, we already dived into it, but the first aspect is the lack of full disclosure. When there is a lack of full disclosure, then that contract is voidable. Okay, if you and I got into a contract and I didn't tell you something, or I put in some hidden things, or I hid something from you, then technically that contract becomes voidable. Okay, because under contract law, you must have full disclosure. Okay, you must have a mutual agreement, and then you must have a consideration. Now let's talk about what a consideration. When you look at the definition of consideration in a contract, it means that in contract law, consideration means that each party to a contract must exchange something of value, a promise, a act, or forbearance with each other in order for the contract to be enforceable. Okay? It's bargained for exchange that demonstrates a mutual commitment and ensures that the agreement isn't a unilateral gift. Okay? So, back to the aspect of you creating a signature that I would say was the original exchange, and then them saying that they loaned you money that they actually didn't because that's what you signed for. That is the consideration. Okay, so part of you asking and making sure that there is a consideration is, hey, did I actually get money, or did I just get a bookkeeping entry called a deposit? Okay, but then we dive into UCC 3-305, which have valid defenses against negotiable instruments. So in that aspect, fraud, okay, lack of consideration, okay, and unauthorized terms. If there are some terms that you never authorized, if there is a lack of consideration, if there's fraud, you have a right to defend yourself against that contract and assert your rights as it pertains to the missing information in that contract. All right. And then we dive into the Truth in Lending Act, 15 U.S.C. 1601. And I talk about this in my videos, but, for all the new people who, never seen some of these things that I talk about, it says that, and this is the Truth in Lending Act, 15 U.S.C. 1601. Okay, so you can use this entire section to learn about lending contracts and what disclosures are important to it. But I'll just go straight to the part where it breaks down informed use of credit. Okay, the Congress finds that the economic stabilization would be enhanced and the competition among the various financial institutions and other firms engaged in the extension of consumer credit will be strengthened by the informed use of credit. The informed use of credit results from will come to an awareness of costs thereof by consumers. It is the purpose of this subchapter to ensure a meaningful disclosure of credit terms so that the consumer will be able to compare more readily the various credit terms available to him and avoid the uninformed use of credit, and to protect the consumer against inaccurate or unfair credit billing and credit card practices. For those of you guys that watch my videos on a consistent basis, okay, you guys have seen this, okay? But there's people who watch my video one off, this, that, and the third. Me going through these things over and over and over again is to literally pound it in your head. Okay? Because a lot of times I'll get people that say, oh, I watch all your videos, but then they'll get on the phone with me and they're still asking me questions like, I still say things like, well, I asked them for this and they never gave it to me. Well, it's just as simple as, okay, well, the law says that if they don't give it to you, then the contract becomes voidable. Okay, so if you challenge them enough and they do not respond properly, then you should assert your rights and maybe have it mediated. Okay, maybe take them to court, maybe challenge them and say, hey, look, well, under the law, it says that you guys must provide this to me. And when you don't provide it to me, then that is actually a criminal action under 15 U.S.C. 1611. It says criminal liability for willful and knowing violation. Okay. Part of willful and knowing violation is giving false or inaccurate information or fails to provide information which he is required to disclose. Okay, so if you know this, if you're following the information that I'm saying, if you guys are taking what I'm telling you serious and you're actually doing the due diligence and reading it, then there's no way that you could literally hop on a phone and ask me the same questions. Okay, For those of you guys that claim you watch all my YouTube videos. Okay. So understand this. If they never told you you funded the loan, how can it be enforceable? They never disclosed that your signature was the one that actually funded the loan, then yeah, there is no place for them to enforce you to pay. Because if you shift the burden of proof onto them and you say, hey, look, well, you guys never loaned me money, so what am I repaying? What am I paying you back for? And you know what? If I'm supposed to pay you back, can you prove that you actually funded the money? And when you do that, then I'll pay you. Okay? So here's what you can do about it. Okay? Number one, you can challenge the contract using conditional acceptance. You can challenge the contract using the affidavit of truth. You can demand for full accounting under UCC 9-210. And you can ask for a qualified written request under 12 USC 2605. Now, for those of you guys who don't know what that is, go back, rewatch that again, and literally write it down. Okay? Go look it up on your own time. All right? Now, you can ask for a original promissory note. These are the things that you're going to ask for. Okay, you're gonna ask for evidence of consideration, even if you don't know these terms that I just talked about. Even if you don't know these different types of letters and things of that nature, I have many videos in my debt discharge playlist that will show at the end of this video where you can literally watch every video and I literally break these stuff down. Okay, the original promissory note this is what you're asking for: evidence of consideration. Did you fund the loan? Was there an even exchange? Proof of funding. Show me the proof if you funded it. Don't just tell me you did. Just show me the proof. Don't give me a loan document and say that you funded it. Don't tell me that I agreed to something, but you didn't give me full disclosure. So my agreement was actually done through inducement. You just persuaded me, okay? And you got to tell me where the money was originated. And if whatever is coming out your mouth is not you doing it through fractional reserve banking, then you are committing fraud. Okay, so this is what you want to do. You want to use this as leverage to stop collections, to fight lawsuits, to file counterclaims, and to educate others. Now, once again, I haven't said this, but this is not legal advice. This is just for educational purposes only. Everything I just said to you just now is information that anybody can go online and find, and I'll suggest you do it. Don't take my word for it. Watch the video, gain clarity, gain insight, go tap into any information source. Look up the qualified written statement. Look up the conditional acceptance process. Look up the administrative process. Look up debt. Look up the amount of money mechanics. Look up how to write a affidavit of truth. Do whatever it is that you need to do. Don't just take my word for it. Okay? Now, understand that most people will spend their lives paying back money they created themselves, and no one never tells them the truth. Okay? But once you understand the game, you actually stop playing victim and start using the law. Okay? You stop using emotion and you start moving off of truth. Okay? Everything is really, if you're in a space where you just don't believe it, you're just, and not to be that person, but the system really indoctrinated you into thinking these things. But it's going to take you actually going and reviewing the information for yourself. It's going to take you looking at more content similar to mine. It's going to take you actually diving into the information yourself and really attempting to have a deep understanding when it comes to debt discharge, when it comes to consumer law, when it comes to just understanding your rights as a consumer. Okay, and this is just a small piece of your rights. Okay, it's going to take you really diving into this in order for you to get out of that indoctrination, in order for you to step outside the box. Because not only will this help you apply in an aspect of fighting debt collectors, but once you get to a point where you start to fight debt collectors, you'll stop thinking that they are above you. You will start to think that, damn, I can actually do the same exact thing that they do, whether it's I'm going to use it against them or whether it's I'm going to start my own business, whether I'm going to become a debt collector. Look, hey, there's nothing wrong with it. Debt collectors make their money. We can hate them all they want, but if you became a debt collector, you will probably make some money. Okay? Now, we don't want to do that. If you was a bank, same thing. You'll be able to take people's promise to pay notes and be able to use the system against them as well. But that's the whole point. You know what I mean? Not to get people to do negative things, but here's the other aspect. If you can do that, then you can also create a business that can be worth multi-million dollars. If you can do that, then you could be able to do as small as create a business that is making 10,000 a month. Okay, maybe an extra 5,000 a month, but maybe on a scale of 100,000 a month. Okay, so don't think that you cannot do what anybody else are doing, or this is only reserved for banks. This is only reserved for debt collectors. Okay, to make all this money in this world, invest in the stock market, invest in themselves. This is not reserved to them. So understand that this conversation is bigger than just fighting your debt. This conversation is bigger than just, understanding your rights as a consumer. It's much bigger than that, because once you understand your rights as a consumer, you have more power as an individual. Okay, this is just financial literacy, a piece of financial literacy, and I don't want you to stop here. Okay, so for those of you guys that are on the debt discharge aspect, you guys want to learn more about that, have the complete debt guide. The complete debt guide literally will have the full breakdown of everything I just talked about today. Also, at the same time, I'll have challenge templates in regards to the conditional acceptance. You will get access to the QWR written request. You will get access to the affidavit of truth. You'll get access to all of these different letter types that I talk about, not only in this video, but in other videos where I do show you guys it, where I do provide you examples, where I do tell you exactly what to put in the letters, whether or not you use a template or not. I'd rather you use these templates for educational purposes and don't just copy paste and send it in and hope for a result. Really understand these templates, really understand what is being asked of these things. So not only are you just writing the letters, but you also, if you find yourself in court, you're able to communicate these things. And that's the most important thing. Okay, if you're trying to talk to a friend or family member that doesn't believe in this stuff, and you start to show them the facts, or you start to really speak to an aspect of understanding these things, because there are people who want to be able to show other people and empower other people and teach other people and educate other people. You can use not only the YouTube videos that I create, but you can also be able to communicate it. You can also be able to speak to these people as well and show them these examples. Okay. You can also show the laws that back everything up that I'm talking about. And also, if you do get the complete debt guide, it's only $47. Okay, this is probably the cheapest that the market will actually give it, with the value they're going to get. Not only are you going to get that step-by-step instruction, but you're going to get the templates in all the resources that I personally use to be able to educate myself, and also at the same time be able to challenge creditors, debt collectors, stop lawsuits, and things of that nature. Okay. For those of you guys who do get the complete debt guide, you also are able to use it as an affiliate. Okay, so yes, you can, not only for the people who are interested in it, instead of just sending them to my channel and I just collect all the money, you guys can take the complete debt guide, and you can take the complete debt guide and refer it to other people. Okay, now everything that I do as far as the complete debt guide is literally to make sure I can continue to keep dropping more videos just like this. Okay, now number 2, if you want to work with me one-on-one, okay? And this is a private coaching experience. It's not really on the aspect of where I'm going to help you discharge your debt and things of that nature. But if you are a part of my mentorship, I do focus on credit repair. I do focus on business funding. And I do focus on helping somebody make money online, okay? Specifically, if you are a person that has a credit repair company, okay? If you're a person who wants to start diving into teaching people consumer law content, if you're a person that wants to actually start getting into content creation and taking your business using content online, these are the people that need to book that one-on-one call. Okay, if you're trying to get to a space where you're making 10,000 a month, 20,000 a month, and you want to be able to take whatever you have, your credit repair business, and take it to 10,000 a month or more, and you want to be able to generate leads for your business, tap in with that one-on-one mentorship. Okay, if you tap into that one-on-one mentorship and you are interested in these concepts that I'm talking about, you get all of my course material as well with it, okay? And if you have questions about my course material, then yes, I will tell you in my mentorship, I will consult you on these things, okay? Now, part of my one-on-one mentorship, if you want to see me on a consistent basis, get updates when I drop YouTube videos, follow me on Instagram at biz.nick, okay? Number 3, have you ever questioned where money actually came from? Drop your thoughts down below. It's time to talk real freedom. Remember, if you've gotten all the way to the end, make sure to like, subscribe, turn on the post notifications. Down below, comment the word discharge and let me know exactly how you feel about the information that you heard in this video. Was it brand new information? Did it stand out? Was it profound? Talk to me nice down below. Remember, I love you guys, and I'll see you in the next one.